No way, a 1 to 70 risk reward in 24 hours? What? That is impossible, is what I used to think before I was actually exposed to this information. I'm gonna show you guys exactly how I caught this 1 to 70 risk reward and a 1 to 40 risk reward, which was actually provided to my students in my inner circle group chat prior to the move actually happening. I know when you hear these sort of risk rewards, 1 to 70s, 1 to 100s, there's a lot of skepticism and there's a lot of doubt that comes with it, which, hey, I don't blame you, man, because I was in your position. But it's truth be told, this stuff is possible when you understand the higher time frame narrative and can work your way in on a lower time frame. So for me, I've dedicated the last 6 years to really dive into these lower time frames and truly understand the market mechanics. And that's exactly what we're going to break down in today's video. So with no further ado, let's get right into the breakdown. So I want you guys to understand now, before some of you say, oh, you didn't catch the trade. Well, here's the screenshot, right? Here's the before screenshot. And this was actually called in my inner circle group chat way before we even took this trade. So for those who are in my mentorship, they did have access, they did take this trade alongside me. But what I want to do is help you guys who are not in the mentorship understand how we caught a 1 to 73 risk reward and a 1 to 44 risk reward in literally 24 hours. So let's get right into it. And what I want to do is I want to replay this back to the point which we saw this, so you guys can understand the thought process, the logic, and really the reasoning. First things first, when it comes to taking these sort of trades, I want you to understand that the directional bias which we catch on these trades, it comes from understanding fundamental analysis. Now, fundamental analysis is a lot more than just looking at the news and saying, oh my God, there's a red folder news, so I'm not going to trade, or oh my God, there's a red folder, so we're going to see big moves. No. When you can truly understand the macro and microeconomic cycles, this is what has given me a massive edge in the market. But hey, that's another convo for another day. But what I want you to understand is that the macro higher time frame fundamental bias for EURUSD is extremely bullish because money is beginning to flow out of the US dollar as the economy is beginning to switch on to what we call a risk on environment. This is meaning that we're going to see the dollar depreciate, which is what we've been seeing all throughout of 2023. Dollar has been depreciating. Again, this is due to CPI, inflation coming a lot lower, and of course, the rest of the macroeconomic factors. So when we look at this time frame, we know that we're already bullish on the higher time frames because of our fundamental analysis, because money is flowing out of the dollar, and more importantly, it's the dollar that drives EURUSD. Now, what we can see on the higher time frames is that we confirmed a massive reaccumulation here to the left. And if you don't know what a reaccumulation is, I've done plenty of videos breaking down exactly what reaccumulations are and exactly how you can identify it. But what we can see is that price has given us our manipulation of our lows. Because think about what happened during this reaccumulation. How many people were enticed short over here when they saw this distribution? Maybe they saw this break of structure or the change of character everyone's now using. What happened was everyone was enticed short. Then the market came back into a demand zone. And from that demand zone, we saw beautiful reactions, beautiful accumulation of price, ultimately jumping across our creek and creating our new leg. So what happened during this reaccumulation was a lot of people were enticed on the sell side. Once people were enticed on the sell side, that's when the buyers began to step in and obviously ultimately just take their orders from them. So at this point, once we saw this reaccumulation, right, this is how I determined the second part to my bias. So by looking at the market cycle and seeing that I've got this reaccumulation over here, what this gives me is now a line in the sand, an invalidation point at the last low that created our new high. Because what we have is an accumulation that has invalidated distribution. So we can say that we've got successful cause and effect. We can say that we know buyers are in control of this market because look what happened, right? Accumulation, distribution, what did the accumulation do? The accumulation resulted in it completely invalidating all the sellers that came in during that time. So what happens there is we can put our line in the sand on the last low that led to that new high. And as you can see within this market cycle here, we also have a lower time frame reaccumulation that specifically causes the break of this distribution. So this is what narrowed it down to my point of interest. So for me now, it's literally just a case of will price return back to this reaccumulation or will it continue to reaccumulate much higher? And in order for price to actually come back down to this reaccumulation, price is going to need to at least distribute and enter a lower time frame bearish market cycle to bring us back down to this demand zone. And you can see we did get that distribution. So once we had this distribution and price confirmed, there was really just two scenarios which we was going to do. It was either A, we was going to manipulate these lows, jump across the creek and create and confirm this is a reaccumulation, which would basically just play a pullback to then send price higher. Or we would then see price distribute, enter the bearish market cycle like we did, and this is where we went short on confirmation of that, to now look for some hedges in. Again, I like to hedge. Maybe I'll do a proper videos on hedging, but the reason I like to hedge is because me taking the sell position, right, that completely takes the risk out of these buy positions down here. So even if these buy positions lose, well, technically I ain't going to lose because I'm already positioned in the sell, right? And even taking that sell position, even if that lost, I wasn't going to lose because, again, I situated myself back in the buys all the way back down here. Again, if you guys want, let me know. We'll do a whole video on hedging specifically as well. But once price was, confirmed this distribution and began to come down, it was now understanding that yes, on the higher time frame, buyers are in control. But what's going to happen on the lower time frames? Well, lower time frames are bearish, right? Because we have a distro, we can see the market redistributing and redistributing. So what we need to see now is price confirm demand and show us that demand is present on the lower time frames alongside with the higher time frames. And at that point, once both time frames are in correlation, when the lower time frame comes in, right, gives us our shift, and actually confirms that buyers are in control, this is where we can go ahead and execute on our positions. It's just a case of waiting, right? You can see that price entered this bearish market cycle to the downside, and as price begins to come into our key levels, we then can drop down to a lower time frame to see if we're seeing a confirmation of demand. Now, what we can see here is a beautiful, beautiful type 2 accumulation. Now, within this type 2 accumulation, again, what's the difference between a type 2 accumulation and a type 1? What you'll find is that in type 1 accumulations, you typically have a secondary test in B, so one manipulation of the lows and then a second manipulation of the lows. What actually happens when you get type 2s is you only get one manipulation of the low, which acts as a secondary test in phase B. Once we obviously got this, we just needed the price to confirm a sign of strength. Now, when you're looking at EURUSD, you always want to look at the dollar index as well at the same time. Dollar index is diametrically opposed to EURUSD, meaning they're the opposites. So anytime I look at EURUSD, I have to look at the dollar index to figure out what is actually going on. Is there any divergences? Is one lagging? Is one leading? Like, what is actually going on and who's in control? Now, from there, you can see that EURUSD didn't actually break this high. However, on the DXY, the dollar, we did confirm the distro and break the low. So that was okay for me to look for this trade here. Furthermore, if you look what actually happens in the secondary test in phase B, in this manipulation, if we drop down and actually zoom in, price comes in and creates a micro accumulation as well, right? Where price comes in, right? You can see it starts to form a trading range. And if we really want to label this up, you get that seller's climax to your automatic reaction, to your test, to your test, to your test in B, to then your sign of strength. Now, upon confirmation of this accumulation as well, one thing I also liked, which increased the probabilities, is that we had an Asia sweep. And if you want this indicator, guys, all you got to do is come to the indicator store. It's completely free. Type in best Asia range indicator by myself. And then here are the settings that I personally used. So you can just kind of make it the exact same and pause the video as you wish. But what I'll find with Asia is that the highest probable scenarios normally will give an Asia sweep. So Asia will build some liquidity, right? Frankfurt sets the higher low of the day, sweeps Asia, and then comes back in New York for a continuation. And this is literally the entry model we saw, right? Price accumulates during Frankfurt, and we come back for that continuation during New York session later on. So in terms of the entry for this, right, again with the screenshot, what I like to do is look at the manipulation. So for me, what I did is I came in, or I measured out my last manipulation, and then from there I can literally just set a limit order up to 50 and the 80 of this. I mean, there's a few ways you can enter it, like you can just set a blind limit on the 50 where you're stopped below the low, or you can split your risk into two, which I did. So I placed one limit on the 50, stop below the 80, and another limit on the 80, stop below the 0. For me, what actually happened was the 50 entry got stopped out, and it came in and tagged me off the 80%. On TradingView, you can see it comes very, very close. But of course, when you're setting these limits, you base everything on your broker, right? So what I mean by my broker is, go onto your MetaTrader on the broker that you trade with, and set your limit order based on them. If you want to know the broker I trade with, I will put a link to my broker in the description, which gives me tight spreads. Literally on EURUSD right now, it's 0.01 pips. So again, for me, I got filled off the 80%. My 50 got stopped out, but I'm okay with that. I don't care to win every single trade because the risk to rewards is justified. Again, if we're looking at over a 1 to 44, we can lose 40 trades in a row, win one of these trades and still be fine. Now, obviously, side note, we're not going to lose that many trades in a row. For me, I'm between a 50 to 60% accuracy trader, right? That's all I need with a minimum of a 1 to 10. Right? I don't care about winning every single trade. I know that if I start a trading week, I'm going to have a few losses. And of course, the winners that I get are going to have massive, massive, massive profits. And this is actually a big thing that really turned me from an amateur to professional, was understanding that losing trades is far more important than winning trades. Now you're thinking, what do you mean, Kieran? You want to click off the video? Well, hear me out. How can you win a trade if you don't know how to lose a trade, right? If you can't go take a loss and be emotionally sound after that loss, you won't be able to take a winner, because what happens is when you lose a trade or when you get emotional in the market, think of it like a lens that comes over your face and it clouds your judgment. So anytime you be getting emotional when you're losing, what will happen is it will cloud your judgment and now cause you to make silly mistakes. Now, I've done a whole video about this in more detail that speaks about the hidden forces that really cause you to fail in the markets. This is why you have to have a line in the sand, right? A line in the sand is your invalidation point. And for me, right, my validation point is this low, right? As long as price doesn't break this low, I'm okay to get stopped out and take another entry. Now, mind you, what I did is I set two limits, as you can see here, right? On the 50, on the 80, just like so. My 50 did get stopped out, but I did get tagged into the 80. Sometimes what will happen is you end up getting tagged in both. You'll get tagged in the 50 and you'll get tagged in the 80 as well. And they're the best scenarios. But what I did on this trade here is I actually saved myself some of my risk. And I then dived down to the lower time frames to get a seconds-based entry. And again, it's just the same sort of thing like we did on the higher time frames. Have a point of interest, wait for price to come in, and give a lower time frame schematic. And you can see price comes in. And what we got here was a beautiful, beautiful, beautiful type 2 schematic where we have our selling climax, automatic reaction, secondary test, up price action, secondary test in phase B, followed by our sign of strength. And the entry for me was just based on the same thing. And then from there, it's just managing the trade, right? Once price gives us sign of strength, we reduce our risk, we move our stop loss from the low to below here. And then from there, it's just standard trade protocols. So now in terms of targets, right, how I target is I use my devil's advocate. So obviously we've got this liquidity on these highs, which was our first target, which was a 1 to 23 on the second entry and a 1 to 13. So once price came here, it was a case of just simply taking some partial profits and then waiting for the price to come to our second target, which is this devil's advocate over here, which was this redistribution. So I use other supply and demand zones as other areas to target, so I'm not caught out when the market, if it wants to reverse, because we got to remember is the market's only going to go from zone to zone, right? It's not just going to randomly reverse. It's only going to reverse from areas of supply and demand, which are true supply and demand. So for me, my second target was the Asia highs inside of this devil's advocate, which would have given us a 1 to 50 and a 1 to 30. And it was simply just a case of waiting for price to make its way to that area where we then close more partial profits. Now, some of you might be in the comments like, oh my God, you're not really catching these trades because you're taking partials. Well, duh, you've got to take partials. Like, not taking partials was one of the dumbest things I did in my career. And taking partials frequently and often was one of the smartest things I made, because this is what keeps your equity, right, nice and steady. Right? Remember, your equity on your account, you don't want it to be so erratic and so crazy. You want a very nice, slow and controlled equity curve. Because when you're risking a lot per trade, and again, right, I only risk, like on these positions, I risk 0.125% of my account balance. I don't need to be risking 4%, 5%, 2% per trade because, well, firstly, all right, I don't want to go in fat drawdowns. And secondly, with these risk rewards, I don't need to be risking a lot. And thirdly, well, when your account size is bigger, you don't need to be risking 2, 3, 4, 5% on an account. All right, remember reality here. As traders, we're risk managers, right? You need to manage risk as much as you can, minimize drawdown and maximize upside. And this is obviously when NFP come out the next day. So when NFP came out as predicted. From there, right, obviously this catalyzed price to our next target. And then the final target for me was just this little micro distribution up here on the left. And I just wanted to see what price would do as she works her way up there, if she was going to work her way towards that 50 and that 80. And again, what you can see inside of this distro here to the left is that we have imbalance inside of it. The price wants to come and fill. Maybe I'll do a whole video on imbalance. I have done one on Pips of Persia's channel already, if you haven't seen that. But yeah, this was my next target where I partialed out some more volume in this trade, which hit my 1 to 72 target and then my 1 to 41 risk to reward. As of current time, I am still holding volume on this trade open. We have pulled back. I don't really care what happens now because I have partialed out. So it's just a case of letting the market really do what it wants to do now. And yeah, man, of course, this trade was called out to my group chat as well on the inner circle. I will put a screenshot, in the timestamps when we did call it out to the channel as well. Here's the before screenshot, and I would definitely recommend going back and back testing this trade because this was an absolute beauty. With that being said, guys, this concludes today's video. If you do like these videos where we're doing more of a chart breakdown, more market analysis and actually technicals rather than the mindset stuff we've been doing recently, hey, please let me know in the chat box. I'd love to know you guys' opinions. I'd love to know what sort of content you guys want to see more from me because, I love doing this. And as a full-time trader, man, for the last 4.5 years, it gets pretty boring. So, yeah, I do have a video planned to be doing with Pips of Persia as well. If you are seeing this today, I actually have a giveaway going live right now over on my Instagram where we're giving away mentorship, we're giving away 200K account, we're giving away so much sauce. So all my links will be in the description if you want to enter that as well. But with that being said, drop something in the comment you liked and you learned from this video. And with that being said, don't forget to comment, like, and subscribe. And I'll see you guys all at the top, from the top, because the bottom's way too crowded. Sheesh.